Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. Two of the biggest solar stocks took a big hit this week. I'm Jason Hall. This is The Smattering. We're going to talk about why the stocks fell, and we're also going to talk about our expectations going forward. I've got Tyler Crow here with me to talk about these two stocks. Hey, Tyler.
How's it going, Jason? Solar. What an interesting time to talk about this.
It is. And let's go back a little bit, right? Because the thing that actually set these two stocks up to fall goes back to the passing of the Inflation Reduction Act here in the US. Because of billions of dollars of funding for renewables that was part of it, we saw just about every stock that was either directly or even tangentially expected to benefit from it go on an absolute tear. And we think about, for solar, let's be honest, it's certainly one that is going to be a direct beneficiary of this with its focus on utility scale solar. And then with Enphase Energy, with those microinverters that are so popular for rooftop solar installation, the distributed solar, that's the other side from utility, these aren't tangential ones. These are directly tied to it. But what's happened here?
I think a lot of ambitious investors ran into the realities of the solar industry. I think you and I we followed this.
Something you and I have been smashing our faces against for the past 15 years.
Yeah, I trust me, I have a whole bottle of aspirin on the desk right next to me when I look at solar earnings. For a large part because I've said this a couple times in other places, but the solar industry is a cyclical industry masquerading as a growth industry, wherein manufacturing tends to come on really fast. Demand, although growing rapidly, tends to be very lumpy. And so you have these like micro cycles or relatively short 2-3 cycle windows where things look awful, things look great, things look awful again. A new bill comes out and everybody wants to jump into solar, but then they see the earnings. And I feel like this has been the exact story for
This
like
is another verse of the
7
same
years.
song we've been singing for a long time.
Yeah.
That's the reality. And I think you hit it. So the way I think about it, again, to describe it again, this is a cyclical industry that has very good secular trends. The long term is going to be growth, but it's going to be a bumpy ride. It's a roller coaster that trends upwards is the way to think about it. Because the reality is everything you were talking about, invest with our apps, our brokerage apps on our phones, we can move a lot faster than SunPower can build a new fabrication line. And the reality is that it takes them multiple years to bring those lines up. And you think about their customers, utility customers, they're making capital allocation decisions multiple years in advance, right? So they may sign for a deal, they may sign a letter of intent this year for an implementation that's going to be late 2024, right? So those are the realities. This is not Amazon Web Services or CrowdStrike, where a customer signs on the dotted line. CrowdStrike goes out and acquires a little more cloud bandwidth space. They flip a switch, a virtual switch, and all of a sudden they generate a bunch of revenue. That's not how it works in this industry. And like you said, investors are learning a hard lesson. Let's start with Enphase because it happened first. The stock has fallen more. It's down by 26% from before it reported earnings and gave this guidance. But what exactly did Enphase tell us that caused investors to sell so quickly?
Yeah, there's kind of two things that came about. One thing, it was in the management comments, and this is going off the Wall Street Journal reporting on it. But basically, they have what is called sell-through for their microinverters, and basically in the first quarter, that tends to be like the seasonally low session for them. And typically, the sell-through decline is about 15%, but this past quarter, it was 21%, which is a significant decline for them in terms of the seasonality of the business. So
Tyler, let's break down what we're talking about with sell-through. And the best way to think about it is Enphase, they don't sell to the end users. They don't sell to people who put them on panels on the rooftop. They sell to manufacturers, solar panel manufacturers. They sell to distributors that supply the installers, and they sell directly to some large installers, national installers they sell directly to. So that sell-through is the process of moving from Enphase to the distributor or whoever the intermediary is before it's sold to the end user.
Yeah.
And it's no longer stuck in between in the market.
Yeah. Basically, the admission is, yeah, we normally see a decline in this rate of things moving through the pipe, but it was actually higher than normal. And the other thing that has a lot of people spooked is residential solar is more or less dominated by the California market. There's just some characteristics of the California resident is a little bit more likely to install residential
Yeah.
solar.
Well,
There's
there's
some,
three. I think there's kind of three. Again, as a
there's,
former California resident, there's three things. Number one, there's lots of sun in most of California, right? So you have the environment that tends to support it. Number two, you have very favorable, generally very favorable incentives, right? From the government working on down, not even just the federal level, but through the state level as well, that pads it. And then number three is it is a massive state in terms of population, right? So you put those three things together, and it's a very attractive market.
yep,
But when one of those things falls a little bit less favorable,
yep.
it upends the market a little bit.
And that's what we're talking about here is that California is changing what's known as the net metering rules. So if you own solar panels, you can, if you're not using that power, you can sell it back to the grid. And that's called net metering. And California is changing their net metering rules such that, when you sell it back into the grid, depending on what time you're selling it back into, if it's like a low price environment, like the middle of the day when everybody has solar power, it doesn't really need a lot of power, the price that you get is considerably lower than like just after sundown, but everyone's air conditioners are still on. It's typically when prices are highest. So much so that their estimates are that net metering rates are going to drop 70 to 80% as a result of this. And it's been California's incentive of getting everybody to install batteries along with residential solar, because that kind of back and forth process of net metering is extremely burdensome on the distribution and transmission network for electric utility. So they're trying to get people off of it as much as possible. So with that,
And if anyone that's paid any attention to the news over the past couple of years, this has been a major challenge for California with brownouts and blackouts, even completely separate from the wildfire issue. The reality is California's grid is massive. It does have such a large population. It's having to penalize, or choosing to penalize, new solar, residential solar, any distributed. So maybe it's rooftop solar on a retail store, right? That's not anything that's not producing for the grid to a utility. All of that distributed solar, it's a punitive action, and it feels punitive, but it's punitive if you don't also have storage to capture that solar during the day and then redeploy it back to the grid when the rates are going to be higher.
Yeah, or use it for personal consumption when the rates are higher, and that's the payback
Right.
here. And the hope being is if you can self-sustain during high demand times, like the brownout time, you can take pressure off of the grid, and that's the big push they're doing here. But for somebody who's a residential person, is like, why am I going to do this if they're going to cut the rates by 70, 80%? That doesn't look good. So because of those things, and because Enphase is so spectacularly tied to residential installations, that was why we saw a lot of the large decline, because Enphase is expecting that to flow into slower growth, maybe flatline growth, and maybe even a slight decline. It's hard to really parse out precisely what this is going to mean.
Yeah, I think the key thing here is that there's going to be a lot of the solar industry trying to figure out what's going to happen. And this is a normal part of the cycle. It may feel abnormal, but this happens all the time. This is NEM 3. We had NEM net metering sometime in the past 5 or 6 years. It's been relatively recent. So these rule changes they happen every few years, and it can have a big effect, at least temporarily. And then the market adjusts. The installers, the manufacturers, like they figure out their new go-to-market strategy. Consumers adjust, and it will return back to growth, right? We know that will as the cycle turns. The one thing I do want to say, Tyler, is that again, this is clearly going to be a more challenging environment for Enphase, at least for the next couple of quarters, maybe longer, right? Depending on how this plays out. And also depending on what happens with the overall economy, right? If we do go into recession, people are going to be less likely to even pursue solar, even though it could be a thing that nets a cost savings, because it's a pretty big commitment to do it. So there is uncertainty, I would say, at least for the rest of the year. But I will say there's a glimmer of hope for this is actually something that could accelerate another part of Enphase's business, and that's energy storage. Full disclosure, I have Enphase equipment on my home, and that includes an Enphase battery. And we're actually Now, Massachusetts, the net metering is different than in California, but we have it set up so that when we do hit the end of the day and solar production absolutely falls off and the grid's demand ramps up as everybody gets home, the batteries, they meet that demand, and I'm not pulling from the grid for that first at least 4 hours after sundown. So that could be, this actually could turn out to be the way that it's being, this carrot and the stick. It could actually, in the long term, it could be positive for Enphase, but I'm not willing to say that's an investable idea until we see evidence that it is.
Yeah.
Let's move on to, do we need to talk about First Solar, or are we done?
I think we should talk about First Solar. Let's keep going.
Okay, yeah, we haven't talked about it. All right, Tyler, let's move on to First Solar. Again, reported earnings. The biggest news is that it was a miss according to Wall Street's expectations. Wall Street was looking for what, $1 a share, and it reported
$1.02, and they reported
$1.02, and it reported around 40 cents a share. So it missed expectations by a little bit more than half. What happened?
I think Wall Street just forgot that this is a manufacturing company that sometimes struggles with profitability depending on where they are in the cycle. And they were profitable, which actually is a improvement from the previous quarter and year over year. You have that going for it. It's been this transition where it's gone away from actual doing solar development itself and is just becoming a manufacturer. And so some of the write-down costs associated with that have been wrung out of the business. And now we're just a manufacturing. It's not the highest margin business in the world, solar panel manufacturing. As much as it is a high growth, it's not very high margin. The thing that for solar is, to me, is it just looks like this is business as usual. And I think investors can just expect slow, modest growth, but it's almost plugged in. If you look at their sales, they basically give you their net booking backlogs, like how many sales they have booked. And as of the day they reported, April 27th, they had 71.6 gigawatts of net bookings on the books. And they're currently producing about 1.9 gigawatts per quarter with a huge scale up coming. But even at that sort of rate, we have many years of sales.
That's 9 years of production, current production levels. And we know that they're about to deploy substantial capital to, I think they're going to be roughly doubling their production capacity.
Yeah, I
over
think
the next several years.
There was a Bloomberg reporter had it that they're basically sold out all the way through 2026. So sales from now all the way for the next 3 years completely sold out. So the customers are there, the sales are there. They just have to produce. They have to expand production. So expanding production is obviously a little capital intensive, and the expenditures for tooling and all those other things. So you have that, and it's obviously not going to be the highest margin business in the world. And so you're going to go through things like this. I'm more, Wall Street, what were you thinking? More than, oh yeah, First Solar really disappointed. This is just how it's always been with First Solar. Still has $2 billion in cash in marketable securities at the end of the quarter. So it's got plenty of cash to deploy for all these new investments.
And it doesn't have a ton of debt, so it doesn't have additional expense to cover for debt there. So it's, I would say it has the cleanest balance sheet of probably any solar panel manufacturer.
By a wide margin. So the cash is there to make the investments. It's going to keep on trickling in from manufacturing, maybe a little bit lumpy depending on their costs. But it's one that I like to follow, and it's one that I am invested in, and I will put new money in at the right time. And I think coming off of this euphoric high of the Inflation Reduction Act is not the time to be investing in solar. First Solar, it's more when everybody's questioning what's taking them so long.